Well, here's a man I've been looking forward to talking to, Kooyman from Denker Capital. You've pushed us in the right direction, Kokkie, not least the BizNews portfolio. We bought Absa shares after you said we should. And my goodness, they've been running like a scalded cat and might even be doing better after today's results.
Yeah, no, the result was very good. And look, over past 30 plus years, I've just learned that when valuations get to the low levels where we are, and globally on banks, but South Africa as well, then all the bad news is already in the price. And then as the good news starts coming through, then you get this re-rating. And in South Africa, and actually globally, banks are healthy. So people forget about all the regulatory burdens that have been placed on them with more capital, diversified portfolios. In any case, all of that is now today. Absa came out with very good results, and obviously the market. You can see the price not so strong today because the market has been expecting it, but we'll get to that at the end as to going forward. But the loan growth was very good, depending on whether you take net or loan growth, but between 10 and 12%. And by the way, and I've been critical of Absa, 6 years ago when they started the new turnaround plan. You might remember they were actually growing quite aggressively into what we thought was an economic downturn, which was happening. But that loan growth has actually been sustained, except for the 1 year, 2020, obviously COVID. But for the rest, they've gradually been taking market share. And this result so far as well. We'll see what the other banks report, but I think their loan growth has been very good, except obviously for Capitec, which is just a different animal at this stage. But what's important, the loan growth has at the same time been supported by wider net interest margins, which means they're able to charge more for their clients, and actually at the same time not pay that same incremental charge-out rate on their deposits. And that's a function of where we are in the world with higher interest rates. So banks generally at the beginning of the higher interest rate cycle raise the interest rates quicker than they have to on the deposit side, and that leads to an opening of the margin. So, but also what's very important, they have controlled the costs well, and bad debts at the upper end of their own guidance, the cost of risk, as we call that, 90 basis points, 91 basis points. But that's good. That means of every 100 Rand they lend out, they provide or write off, let's say 1%. But what is important here is the coverage of their non-performing loans is 4 times. So they've got reserves 4 times the potential bad debts, which means they could afford, if you have a downturn, they could afford to have quite a big bad debt charge and still take it from reserves. But it also means, and at the end we must talk about that, if the economy does start to recover, then that means there's a lot of excess reserves, which means more profitability going forward.
You've given us such a good summary there, Kokkie. Thank you very much. Just from the specifics, though, the Absa share price was below 160 Rand. It's now approaching 190 Rand. So it's had a nice run. At this level, is it still cheap for those who perhaps didn't get in the 150s?
Yeah, no, it's not screaming cheap anymore, but it's still cheap. It's still trading. We look at price to tangible net asset value, so we strip out goodwill and all kinds of other things. Then it's still trading at 1.23, which is still the lowest, I think, in except for 2020, obviously, in 10 years. The dividend yield going forward is now 6.6% after the tax on divvy. We always look at the divvy after tax on divvy. If you just take including the divvy, then it gives you a 9%. The tax, then you get a 9% forward dividend yield. The PE going forward is 6.3. All those metrics show that Absa is trading along with the other banks. Well, Nedbank, Standard Bank, FirstRand's a bit more expensive, but the banks and Absa specifically for what it's doing is just trading still way too low. The share price could most probably go up another. It should go at least another 50% in 2 years.
Wow.
You never know quite when the re-rating comes, whether it's this year, unless we really have a bad scenario in South Africa. But even there, gradually things are improving. Your conversation last time seems to be happening. The private sector is starting to get involved, even with this government. So there's going to be demand for more capital expenditure. So the banks are very well positioned. So it's still cheap.
Okay, so that's the rating of Absa itself. What about the rating of the management? That was one of the reasons why you really liked
Okay.
Absa.
Yes.
Arrie Rautenbach and his new team. How have they come through
Yes.
in this first set of results from under his leadership?
Yes. Very good. But bear in mind, banks, our banks, well, most banks, Michael Jordan is in the fortunate position that he's still small and same as time. But your large banks are massive, like battleships. It takes a long time to turn. And so, but this current team that's there now started doing the heavy work 4 or 5 years ago. And so the results we see now is what they already started doing, and consistently they have been doing well. And I must there really commend them, because our main concern as shareholders was at board level, where almost the board seemed dysfunctional with what was going on there, and not focusing on operations, but more focusing on directors who were, all the shenanigans that were going, well, not shenanigans, but were court cases and appointments of new CEO. But that seems to be behind them, and the management team have not been affected by that. So I think if the board keeps this team in place, and obviously the problem in South Africa is that team is still fairly white, which means it has a lot of experience and it's older, but they're at the second level, there's enough good BE candidates that have been trained over the years that are starting to come through. So I think if they can keep the team together and slowly bleed in the new management that is on the second level, then they're very well positioned.
You've always had a situation, well, not always, but you've had a situation in South Africa for some decades now where it's been the top bank has either been FirstRand or Standard Bank. Let's keep Capitec out because, as you say, that's a special situation. And Nedbank, Absa, kind of bringing up the rear. With this new management team, are they in a position to start challenging Standard Bank and FirstRand for that top position in the country?
Yeah, I would rate this team better than Standard Bank's. Standard Bank's team, there seems to be a slowness and inertia in decision making. Standard Bank have made a lot of errors, it seems, from the outside on the information or the IT infrastructure, the projects. A lot of it has been outsourced. You've seen high profile guys leave there. So I would say Absa is better positioned. It's also in that regard still strong in home loans. And the corporate bank has obviously not grown so strongly this year. A lot of it was retail and business banking. But the corporate bank, if South Africa picks up, they'll come through stronger. That's always been Absa's weakness historically, all the years ago. And that's why, by the way, they did that deal with Barclays all those years ago to improve the corporate banking. Standard Bank have got the advantage, obviously, of a very large African network, but that's been more of a disadvantage. Absa's African network has done quite well. In fact, profit grew in Africa, I think 32% versus South Africa's 28%. So, but the African operations are quite focused, where Standard Bank is more diversified. So I would say, based on this performance, gradually, I think Absa should start trading above Standard Bank on its price to NAV or PE, which it's not at the moment. So I think Absa should re-rate further.
So traders then who are invested in Standard Bank might be switching to Absa on that advice, or the real traders would go short Standard Bank, long Absa.
Yeah. Well, or ask very hard questions of the Standard Bank team. Also just if you look at Liberty, how long it's taken to just fix that and still not fixed. There are a lot of signs that it's not such a good focus ship as Absa is. So yeah, a FirstRand obviously in a different league, and it takes a long time to get to that level. And obviously that's what must be motivating the management team, to say, look at the best practice with the peers, and we want to do that.
FirstRand's an interesting one. It's back in the news this week because of Paul Harris's attempt to repeat the creation of FirstRand by putting his reign together with Telkom. Just looking back almost 25 years ago when Laurie Dippenaar, GT Ferreira, and Paul Harris put together FirstRand, at that time, what they inherited through the banking side, FNB, was that a little bit like Absa today? In other words, I'm trying to look ahead to say, can these guys at Absa turn themselves into a FirstRand, entrepreneurial, more forward-looking, bigger market share, clearly the number one bank in not just South Africa, but Africa. Is that a possibility?
It's a low probability, I would think. I think three things are different. Number one, remember South Africa went into a period of strong growth then. So the FirstRand guys were lucky with the backdrop. And by the way, that could come. If your scenario, a new government, a private enterprise focused government or cooperation, we could go into a higher growth country. But I think more important that the FirstRand guys, GT, Laurie, Paul, were very entrepreneurial, and they made the decisions. So also at board level. So whereas Absa obviously got a different board, and look, that is what they should strive towards, being more entrepreneurial, but that's very difficult. I mean, GT, Laurie, Paul were very exceptional people, and to get all three of them together in one team was quite exceptional. Paul obviously was a bit younger. GT, Laurie were more the statesmen, the sort of wiser guys. I knew all three fairly well, and I really enjoyed going with Paul, like overseas. We at one stage they were really looking at Brazil and India, and I got to know him fairly well. Very intense, driven individual. So I'm not surprised he's still trying to do those type of things. But Absa haven't got those type of guys. They could grow them, but it's going to be very difficult. But nevertheless, I mean, Absa, for what it is doing, is well positioned, I think.
And the rating.
And its balance sheet, and the balance sheet has got fat. So, as I said, in the reserves there's fat, in the capital there's fat. So how they're going to use that is going to be important.
And the rating as well is in their favor in that they've been derated over the years.
Yeah,
Kokkie,
quite good.
So we're very happy to have Absa, thanks to you, in our portfolio. We're going to continue to hold it there. But one final question. People are looking at Telkom and saying, well, maybe if Paul Harris could help to have put together FirstRand, he could turn that into, and that's trading at, in your terms, 0.6 of book. In other words, it's well below the net asset value. Has he still got it in him? He's 72. He's a smart guy. You know him well enough. Do you think he could turn, if he's successful, he could turn Telkom into a FirstRand of the telecoms industry?
Yes, Alec, you're putting me on the spot here, and it's a tough. Well, it's a political. No, it's a difficult question. Okay, I would say, look, I'm close to Paul's age, not quite there. and what happens as you grow older? You've got a more diverse range of interests. When you're 30, 35, 40, you are focused, and so at his age now, it's not the most important thing in his life. It's fun. But he's got to have other guys doing the execution for him. So he's obviously with the wisdom, and he's got access to all the clever guys. I mean, those same guys still most probably prior watch the rugby together, and so I think there's a lot of insights and wisdom, but there are going to be other guys who have to execute for them, which just if he gets the right guys, it's possible. But I don't think at 72 you've got the same energy anymore than you had at 35, 40, but you've got the wisdom. So it's possible.
Well, he's got Michael Jordan and Willem Roos, who are much younger and certainly very, very competent. So if they get involved with the existing good people who exist at Telkom, as he was saying, but I suppose there's a lot of water under that, still to flow under that bridge, and it's not really your game, but would you be buying Telkom shares?
Look, with those names behind it, you would say, if you've got spare cash or you've got something, I wouldn't say call it, if you make too many punts, that turns out badly. But those names behind it, I think it's worthwhile. It's a low risk. By the way, remember also Michael Jordan he's got his hands full with Bank Zero, although he's got a team there that does that. So he's more at board level or top level. So he's got a bit of free time, not that much. But Roos has got he's got quite a bit of time because remember he's out of OUTsurance. It's an impressive array of people that got together, and they understand the space. They really understand that whole communications space. So I think it's a good call, Alec. Would I sell Absa to buy that? No, but would I sell something else? Yes.
Kooyman from Denker Capital, and I'm Alec Hogg from BizNews.com.